Now shifting focus to Europe. Now trade tensions are escalating between the European Union and China. After 5 EU states, including France, Italy, Spain, the Netherlands and Luthuania, pushed for stronger defense measures and tougher tariffs on Chinese imports, China has warned that any restrictive trade measures would hurt European businesses, consumers and long-term competitiveness.
Whether it is risk mitigation, reducing dependence, or so-called trade balance, these are essentially protectionism. Such measures will only harm the interests of European consumers, raise costs for businesses, and weaken the long-term competitiveness of industries. The EU should view China-EU economic and trade relations comprehensively and objectively, and abide by its free trade commitments. China is also closely monitoring the EU's actions and will take necessary measures to safeguard its legitimate rights and interests.
The same day, European regulators fined Chinese online retailer Temu €200 million under the Digital Services Act, accusing the company of failing to adequately prevent the sale of illegal products on its platform.
Today, Temu has received a fine of €200 million for breaching the Digital Services Act. Temu reaches 130 million consumers in the European Union, but the company has not properly assessed the risks of illegal products being sold on its marketplace. What products are we talking about? Dangerous toys for kids, small electronics without proper label, clothes and jewelry containing harmful chemicals, to name just a few. Our message is clear. If you want to access our market of 450 million consumers, you have to respect our rules. Period.
Total China-EU trade stands at nearly $830 billion. This makes China the EU's largest supplier of imported goods and its second largest overall trading partner. Trade deficit has risen to nearly $360 billion, prompting several states to rally against China's export tactics. While a fragmented EU works towards economic decoupling from China, the very act of abandoning China and its rare earths can be brutal for European industries. The fatigued industrial sector, once the backbone of the European might, could face a major blow if shipments are disrupted in any way. To understand Europe's reliance on China, let's look at the key imports it depends on. For EU's green transition, a policy tied to its long-term goals, China holds the key. According to Eurostat, China accounted for 98% of all solar panel imports into the EU in 2024. China also supplies 88% of lithium-ion batteries used in EVs. EU sources 98% of its rare earth magnets from China. The reliance on Beijing for magnesium stands at 97%. Between early 2025 and early 2026, EU imports of industrial robots from China rose by 315%. A recent European study warned that Chinese products and services are now deeply embedded in Europe's energy systems, including areas linked to critical infrastructure, but divisions remain within Europe over how far to confront China. While some member states want stronger tariffs and stricter controls on Chinese goods and investments, others remain cautious about retaliation and the potential impact on domestic economies. German Trade Minister is currently in Beijing with a delegation of around 40 companies to explore future industrial cooperation and market access opportunities.